Good afternoon, ladies and gentlemen. This is Barry Norman on behalf of ETX, and welcome to our weekly Sunday webinar. And today we're going to be looking at economic events on this week's coming calendar. But before we get started, I've got to read you a risk warning. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds that you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar is for educational purposes only. ETX Capital and the presenter are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. Any securities we talk about tonight are for educational purposes only. Excuse me. And for those of you that don't know that much about ETX, we are a fast-growing financial services company based in London. We are authorized and regulated by the FCA, the Financial Conduct Authority, and we're also a member firm of the London Stock Exchange. When you trade with ETX, if you're a newbie or looking to test strategies or want something different to trade, you can try our ETX binary. Or you can step up, and if you're based in the UK, you can use our spread betting platform. Or around the globe, our CFD platform, our MT4 platform. You can trade commodities, stocks, currencies, indices, you name it, you can trade it with ETX. And if you're not sure which platform is right for you or best for you, you'd like to have them all, it's not a problem. Just contact customer support and they'll get you set up. Not a problem. We are here to serve you at all times. Now, moving into this week, we moved dead center of a month, and on top of it all, it is dead center of a summer vacation month, which means the markets will be relatively quiet they're relatively quiet in July and August anyway, but once we hit about July the 15th, July the 20th, until the end of August, the volatility is relatively low and the volume is low because as most of you all know, most of Europe goes on vacation in August. You have the kids out of school. You're planning long weekend trips. Whatever you're doing, traders are out of the office, or they've just removed themselves from the market because they don't want to get any volatile situations over the summertime. And then, of course, come September, everybody comes roaring back for everything. But that doesn't mean we don't have some good trading scenarios coming up this week. In fact, we have two big events that should offer some excitement for the week and will probably overshadow the news this week. We have the Bank of Japan meeting and we have an ECB meeting. So, of course, Mario Draghi can always keep the markets hopping. So, as you can see from the calendar, there are a lot of events. We also have a lot of Chinese data this week, which will help. We have some U.S. housing data will keep the markets popping. And then we have inflation hearings out of the UK. And then we move into the end of the week. We have Thursday with the Bank of Japan meeting and then wind down the day with the ECB monetary policy statement and Mario Draghi's press conference. Friday is a very, very, very quiet day, only Canadian data basically. So if you want to take a day off, take off Friday this week. Now, this week we'll kick off with releases from China's updated GDP. Now they've come up with a new formula for doing these calculations. So we'll see how that moves into the overall estimates. But we're looking at 6.9%, which is, China's been holding at 6.8, 6.9. They're way off of the years of 21 and 15%. But China's doing just fine. So we have that coming off on tonight or early tomorrow morning, depending on where you're located. Then we have UK inflation has accelerated this year in the aftermath of Brexit. The drop in the pound has hit the British households as the pace of inflation has outgone wage growth, leaving real wage growth in a negative territory for 2017. The problem is, if we keep seeing inflation, the Bank of England might have to start raising rates. This puts it in an awkward position. The Office for National Statistics will publish the British Consumer Price Index on Tuesday. That's inflation, CPI. And inflation was at 2.9% last month, and analysts are forecasting a repeat of that print. But there is a risk it comes in at 3. If it comes in at 3, we're going to have to see the Bank of England take some steps to calm down inflation. And they do that by raising interest rates. Central banks appear to have coordinated their change in rhetoric to a more hawkish tone following the lead of the U.S. Federal Reserve. The Bank of Japan and the ECB are not expected to make big announcements this weekend, but rather make some remarks to prepare the market for eventual changes later this year. The Bank of Japan is likely to mention the improvement in economic fundamentals, but with weak inflation, the central bank is not anticipated to make any move. Japan has virtually, they keep teetering on deflation. They can't get inflation because interest rates are in the negative territory. There is no wage growth at all in Japan because even with all the stimulus, the employers have not been handing out any wage increases, although it's one of the countries with the lowest employment rate around the world. So they've got a problem because their wheel has stopped turning. And overall, their economic situation is improving, but until we see somebody greasing this wheel and turning it, they're a little bit stuck. So we might see some changes in the language in their monetary statement. So the Bank of Japan will release its monetary policy statement on Wednesday, which is actually Thursday morning for us, and they'll hold a press conference at 2:30 in the morning Eastern Daylight Time. Then the ECB could tweak the language of its statement to signal a tapering of its bond buying program. This is very much expected, especially since the U.S. has already mentioned it. The U.S. has already started rate increases and has already started talking about cutting back there's no QE in the U.S., but they started to talk about selling off all they've accumulated, where the ECB is a step behind, where they're still buying up bonds, but they're expected to stop that process or cut that process way back. So on the top tier events, the level 3 events that we could be looking at throughout the week, we have GDP out of China, inflation at the Eurozone. And remember, when we're watching Eurozone numbers, we pay more attention to the German numbers than we do to the overall Eurozone. Then we get CPI out of New Zealand. And if you're trading the Kiwi, it could give you some interesting trading opportunities, especially the Kiwi is very attached to the Chinese dollar, the Chinese yuan. So not just Chinese yuan, Chinese economic data. So if GDP does good for China, you might see some strength in the New Zealand dollar. So we can combine that because it's all coming out the same day, just hours apart. So you might want to combine that together. Then on Tuesday, we start out with the RBA's meeting minutes. It's not expected to cause any volatility. And then we have UK Consumer Price Index. That's going to be the big event on Tuesday. And then we roll right into Wednesday where the Bank of England's inflation reports are. So that inflation report here could cause some volatility in the pound. Then on Thursday, again, we go to Bank of Japan in the morning and then the ECB in the afternoon. Now, on the corporate side, we have U.S. earnings season is in full gear. So there's going to be a lot of happening in the markets. The markets moved to record high closes on Friday. But we're not advising anybody to chase anything. This week on the earnings front are major, mostly banking stocks. So we're going to keep a big eye on Goldman Sachs, Bank of America, Citicorp. And then the UK, we have some big numbers. We have, what do we have out of the UK? Here we go. We have Talk coming, EasyJet coming, Money Superstore. So on Monday, we have two biggies out of the U.S. if you're trading stocks, BlackRock and Netflix. Won't cause any market volatility. On Tuesday, we have Bank of America, Goldman Sachs, Experian. At the UK, we have Royal Mail. We also have IBM, which on its own isn't going to do anything. Wednesday, we have Morgan Stanley staying on the bank end of it. Then on Thursday, we have Microsoft, which could cause some market movement and also help the NASDAQ. And then on Friday, we have General Electric, which most people don't pay that much attention to anymore. And we have Vodafone out of the UK. So that's what we're going to expect on the stock markets this week. Now, last week, to wind up the week, the U.S. dollar was lower across the board after release of U.S. retail sales and inflation data on Friday. The CPI was unchanged from June, and retail sales in the U.S. fell for a second month of record low. Now, the Fed is confident that inflation is low due to temporary factors, anticipating that a strong labor market will lift inflation via wage increases. The more people get wage increases through more jobs, the more manufacturers, suppliers, retailers raise prices. What's keeping the U.S. inflation number so low is the effect of the low crude oil prices. Because it flows all across the board. If you're Walmart and you need to raise your price because your supplier was raising his cost to you, but you have this big drop in your transportation costs, your delivery costs, and your freight costs, you don't necessarily raise your price on the shelf. So you swallow that rate increase or swallow that increase, and therefore it keeps inflation low. But we have also we have low retail sales, which isn't such a horrible thing. People don't always spend on a schedule. The disappointing data raises concerns about the U.S. Federal Reserve's plans of action in the second half of the year. The bank is still on course, and Yellen was very positive last week about another rate increase before the year is over and trimming their balance sheet. So one of the reasons we can account for a lack of retail spending is Americans are a little bit unsure. Obamacare, nothing's happened. Taxes, nothing's happened. We have the mess with the Russian altercations. And when people, even though your jobs are good, the market's good, your everything is, mortgages are good, your housing prices are good, but people tend to not spend when they're uneasy. And the biggest thing is people are uneasy about health care. They don't know what's going on with Trump. So Donald Jr. is in trouble for a meeting with the Russian lawyers, and that's been keeping all the headlines. It seems like North Korea fell out of the headlines, and the dollar reacted, and the dollar's reacting to that. Janet Yellen expressed some concern over inflation, but kept things relatively balanced, leaving room for speculation. The Australian dollar took advantage of an upbeat Chinese data last week, and the pound enjoyed slightly better than expected jobs report and a mixed message from the BOE. The euro made an attempt to move higher, but did not go anywhere fast last week. So let's go day by day and see what's on the calendar for us that we can possibly see a trading opportunity. So on Monday, as I said, we start out tomorrow morning with Chinese GDP. We also get Chinese retail sales. For those trading with us, the good crosses are the Australian and the New Zealand dollar against the US dollar, or against the pound, or against the euro. But the two benefiting, or the commodity currencies, are the Australian and New Zealand dollar, because they're biggest trading partners for China. A jump in retail sales would really be supportive of the NZD. A good number out of GDP would be supportive of both. If you trade Chinese indices, they could help somewhat. I don't know if anybody's trading the renminbi across board, so it's not anything there. Eurozone inflation. That's a good trade against the euro and the euro crosses, as well as possibly the DAX and the CAC. We expect about 1.3% year over year. But I think outside a little bit of volatility, if it's a miss or a hit, everybody's going to be focusing on Thursday's ECB event, so they may not take any action. Then in the afternoon, we have U.S. Empire State Manufacturing. That's for the U.S. or the Northeast Corridor. And we're expecting it to fall to 15 from 19.8. Now, this number happens to come out all over the place, but could have some effect on the S&P and the Dow, and maybe weaken the U.S. dollar a wee bit. So again, early in the morning, China is the world's #2 economy. The demand on the economic giant has a huge impact on the rest of the world. The data published by the Chinese authorities are not considered very accurate, but is certainly a market mover, especially for the Australian dollar. The economy expanded annual rate of 6.9 in Q1, and we're expecting somewhere around 6.8, 6.9 in this report. Note that China also releases industrial output, fixed asset investments, and retail sales at the same time. But overall, we're going to be looking closely at GDP. But remember, like I said, if retail sales do really well, it should spark that New Zealand dollar, because New Zealand dollar exports to China everything from food to dairy products. So if retail sales are up, That's strong for the NZD. Then on Tuesday, we start out the day with the Reserve Bank of Australia meeting minutes. It's only going to have an effect on the Aussie crosses. Then we go into UK inflation, and then later German economic sentiment. So the UK inflation report on Tuesday, the crash of the pound that was one of the results of Brexit is making consumer prices dearer. Britain stands out with a higher inflation among the developed nations. With wage growth running below the rise in prices, standards of living are falling. The Bank of England has a lively debate about whether to raise rates or not. Headline CPI, Consumer Price Index inflation, increased by 2.9% year over year and is expected to be seen again. So we're going to watch that number very closely, and we'll also listen for the inflation reports from the Bank of England on the inflation hearings on Wednesday. Then on Wednesday, we don't have that much until the U.S. markets open, and we have U.S. housing starts and building permits. Big numbers for the U.S. should have some effect on the dollar. And then, of course, we have the weekly crude oil inventory. So building permits stood an annual of 1.17 million in May, while housing starts dropped to 1.09 million. The figure often surprises in different directions, offsetting each other. When they go in the same direction, they have a significant impact. Building permits are expected to rise to 1.20 and housing starts to 1.16. Now, to explain this, U.S. new homes, not existing homes, because U.S. is broken into two things, because they have new home sales and existing home sales. Existing home sales are homes that are already built and occupied being resold. Huge number in the U.S., but so are new home sales. But new home sales have a very specific cycle, because they don't become a sale until the house is finished and this deal is closed. But they follow building permits, because when you've made a deal to buy a new home, and the builder has to build it, once you've been the down payment and everything, he pulls a building permit. Okay, once he pulls the building permit, then he has to start construction. A lot of times you see a huge jump in building permits, but sometimes because of the weather situation, other situations, they don't get started until later. Okay, so but there's a cycle to these. But when both climb simultaneously in 1 month, that tells you the U.S. housing new home sales is booming. Okay, and the faster they start, the housing starts, the faster they come to the completion and the delivery of the house. Yes, and U.S. sells a lot of homes. Then we have crude oil inventory, which is the weekly gauge of inventories. It dropped slightly last week, and the markets jump up and down by this number, only because the speculators are playing a game in the middle of speculating. But it can sometimes offer a trading opportunity. When we go into summer season, there's a shift in demand, only because what most people don't know is there's summer gas and winter gas. And it's a different formulation. And summer gas uses less oil. I don't know exactly how, but it's what they produce during summer. It functions better during high temperatures and high driving demand. I don't know the chemical reasons, but this happens. But we also starting to go into summer drive season, because people are taking long weekends away, car trips in the U.S. So when we go into drive season, gasoline is, they're burning more fuel. So the demand for crude oil in the U.S. goes up. So keep an eye on Wednesday. Thursday, we have a busy, busy day. We start out early in the morning with Japanese trade balance. We flow over there to Australian employment data. Then we go to Bank of Japan, UK retail sales, then the ECB rate decision and Mario Draghi's press conference. Then we go to U.S. jobless claims, which is probably going to has no volatility in the market. And then we have Eurozone consumer confidence, which comes out late in the day. Okay. So we're going to have a market bouncing around. But we start out the day with, during the Asian session, we have the press conference from the Bank of Japan. The Bank of Japan continues its recent policy of keeping 10-year yields around 0%. Recently, it found itself intervening more and more in order to maintain its target, thus printing more money and keeping the pressure on the yen. While no change is expected in the policy driven by Mr. Kudura, the updated assessment about the economy and especially inflation remains very low and will be of interest, but we're not expecting it to cause any volatility in the yen. Then after that, of course, we have the ECB rate decision. Thursday decision will be 11:45, followed by the press conference 45 minutes later. In its latest rate decision in June, the ECB described risk as balance sheet instead of its which is tilted towards the downside. In addition, they no longer mention the option of lower interest rates in their forward guidance, which has helped the euro recover a wee bit because they're now looking to start normalizing policy as opposed to continuing to flood the market. However, there was no clear hints about tapering. They downgraded inflation forecast. In addition, ECB President Mario Draghi expressed frustration about core inflation. Since then, core inflation numbers ticked up, which should make Draghi very, very happy. And Draghi talked about a shift from deflation to reflation and mentioned a gradual removal of the stimulus. At this time, no new forecasts are in the cards, but reporters and markets would like to know if the ECB will announce the beginning of the end of its bond buying scheme. I don't think they're going to mention any shift or any dates. He's probably going to start changing his language a little, but he's not going to give any clues because they're still teetering on the edge. Okay. Currently, the current bond buying is set to expire by year end. Any optimism about inflation growth would be euro positive, while a damp mood by the president of the Frankfurt-based institute would also hurt the euro. I don't think he's going to have a negative attitude. I think Draghi is going to be fairly positive, and it might give a bounce to the euro. I think he should be, I think we've seen the bottom of the bad, and he's starting to be able to see a way of digging himself clear. So I think we'll see his tone a little bit more upbeat, which should help the euro. Then we have, and it also helped the DAX, the CAC, and I don't know if it's going to have an effect on the FTSE. And then we have, moving over to the U.S., we have U.S. Philly Fed manufacturing, which is then, before we had the New York Central, now we're having Philly Fed, which is the Philadelphia area and the central part of the U.S. on the East Coast, East Central manufacturing. This indicator for the manufacturing is published very early. This is one of the months for the month of July. Back in June, the figure beat expectations by 26 with 27.6. A slide to 23.8 is expected. While the sector is small, it is still significant. It used to be a big sector because that's where all the steel was out. It was out of Philadelphia, but most of those jobs and most of that business has been gone for a very, very long time. And jobless claims are released at the same time, but are expected to remain stable. So we're not expecting any volatility in the dollar on Monday. And then Friday is a very boring day. Like I said before, if you're going to go on vacation, do it on Friday. We only have inflation data out of Canada. So if you're trading the Canadian loonie, the Central Bank of Canada is actually talking about raising rates. They've been very, very positive. If we see a good number, the 1.4 comes in, or it's a little bit higher than that, and that's going to push the Bank of Canada to start looking at raising rates. So we might take a look, watch that if you want to trade it, and watch it. The Canadian dollar against the Australian dollar is a good choice. Canadian dollar against the US dollar could be a good choice. Now remember, Canadian dollar also flows with oil and gold because it's the two biggest exports out of Canada. So we want to keep an eye on what's going on in those two markets simultaneously. But that is it for next week. So there are some events that we can look out for. If you're trading stocks or you're trading indices, watch the earnings reports, especially the banking sector. Microsoft could give a bump to the tech sector, but we're going to be mostly in the financial sector this week. So if you want to keep an eye on that, it could offer some interesting volatility in the S&P and the Dow. And should overtake some of the headlines for the week. And that is it for this coming week. Thank you very much for joining us. I don't know what I'm teaching on Wednesday. We've just finished logging all the new classes. Starting in August, we're launching a whole bunch of new classes. We have what is MACD and MACD strategies. We have Bollinger Band strategies And I don't remember the third new class we're launching in August. They're all on strategies now. I forget which one. I have to do them so far ahead of time because I have to go to compliance to get approved. It takes months to get it through compliance because they have to monitor every word I'm saying. And so it's been, I forget what the classes are, but the August calendar will be posted in another week. So you can watch it online and see what those classes are. But remember, August is a slow month. We should have a quiet webinar month also because I'm going to take a wee bit of time on holiday. So we'll see you soon, but we'll see you on Wednesday. Like I said, I don't know what I'm teaching this week, but of course it should always be interesting. Thank you very much. Thank you for being part of ETX, and have a great Sunday evening. Bye now.